Hi, my name is Keith Larsen. I'm a reporter here with The Real Deal. I'm here with Mansoor Ghori, who is the CEO of Petros Pace. And so Mansoor is going to talk to me a little bit about CPACE. So Mansoor, first question is, can you explain what CPACE is?
CPACE is, first of all, it's Property Assessed Clean Energy. That's what it stands for. And really, it's a mechanism for property owners and developers to finance clean energy and energy efficiency upgrades to their properties using a tax assessment as the source of the repayment. Typically what developers will do is they'll use this to fill in their cap stack, either to replace some mezzanine financing, potentially some equity financing, or other parts of the cap stack. It could be EB5, TIF financing, other things that are in there, and they can use it for retrofit projects. They can use it for new construction projects. They can use it for gut rehab projects.
So what type of projects qualify as PACE? Like what would qualify as energy efficiency improvement? What are the upgrades needed to qualify for this type of financing?
Yeah, that's a broad list, and it varies by program. So state by state. For instance, California, there's resiliency measures that you can actually finance, and so there's lots of seismic upgrades that are being done there. And you go to Florida, and they have hurricane resistance resiliency measures that are available to be PACE financed as well. But in general, what you're looking at is anything that's going to reduce the energy efficiency or increase the energy efficiency of the building, is going to reduce the water consumption of the building. And it could be things such as renewable energy as well. So solar and some of the other types of renewable energy projects that are out there.
But why are there so few CPACE deals happening right now in New York City? Why is there a lack of transactions?
The program has finally opened. It was passed several years ago, and unfortunately, COVID set it back about a year. The good news is it's now open. Bad news is it took as long as it did, but it's all great for the city.
Gotcha. And I think when people think about PACE, they think about residential PACE. They think about putting solar panels on roofs. Recently, this program over the past couple of years has come under a lot of criticism. Most recently, John Oliver had a piece on this, mocking it, calling it, essentially a scam. What's different about CPACE? Why is it not like our PACE?
Yeah. So the good news is John Oliver was speaking primarily about the residential side. Right. And that is a very different market because it's typically consumer lending type projects, and it's like getting a credit card, or it's like getting a car loan,
right?
Where there's very few items of diligence that's done prior to getting approved. The commercial side's very, very different. The first thing is it's underwritten like a true commercial bank underwriting a loan. And then secondly, there's lender consent that's required, or that's required in most of the states, but the states that even they don't require it, most of us lenders are doing it anyways as part of our underwriting process. Typically, when you do these projects, it's going to be a 90 to 150 day process versus a 5-minute process, which is typically the residential side.
And then going back to CPACE and where it falls in the capital stack, you kind of seem to see deals fall all over the place. You guys did about a $90 million loan for a big Wall Street building. And then there's the $5 million loan for a small medical office building. Where do you see CPACE falling in the capital stack? Is it going to become a sizable portion of that capital stack, or will it be replacing mezzanine financing? What do you see happening?
I don't know if it's necessarily going to be replacing mezzanine financing. Like if you look at the Wall Street deal, there was mezz financing as part of that transaction. Right. So there was senior, there was mezz, there was us. I think it's going to be like mezz financing in terms of it's going to be, everyone's going to use it eventually. Right now, it's the non-commodity part of the cap stack. But as this market continues to grow and everyone gets a much better understanding of what PACE is and how it's used, it will become, just like going to market to get a senior loan. It'll be, okay, senior loan, mezz, PACE, and the other parts of the cap stack, whether it be a TIF or H1, EB5, et cetera.
On the topic of senior loans, that's been one challenge with CPACE is getting the senior lender to sign off. Is that changing? And how do you convince the senior lender that, that they should give consent to this? And what is your pitch to senior lenders about CPACE?
Yeah, and so there's, I kind of see the market as bifurcated, right? There's this $0 to $50 million market, which is the traditional PACE market. And that's moving fairly effectively, right? The lenders are signing off, the projects are getting larger, and the market is continuing to grow. It's the market that's 50 million and above, which has been the part of the market that's been really hard to break into for the PACE stuff, right? Because those lenders are typically large institutional investors, and they have not, historically, been open to using PACE in projects that they're involved with. But I think the 111 Wall Street deal was, I would say, a seminal moment in the commercial PACE industry, where all of a sudden you have an iconic property in downtown Manhattan with an institutional sponsor and several large institutional lenders that all signed off on PACE. And so I think people's eyes were opened. And I think that's going to continue to open doors and grow the market.
What is their big concern? Is it that they're worried that they won't get paid back in case of a default, or what?
I think it's an educational thing. I don't think historically the PACE industry has explained really how PACE works in the cap stack and how that affects their position, right? So the reality is, if there's ever any issue with that project, the senior lender does not lose any of its rights and remedies. They can take over the project, they can sell the building, they can get their money back, and then don't have to worry about PACE, other than just making sure that we're current on that year's worth of property tax assessment.
Talk to me, explain what happens when a CPACE borrower defaults on the financing, because as you mentioned, it's not a conventional loan, it's a tax assessment. What happens?
First of all, I think if you're not making your CPACE assessment, you're also not making your property tax payments, right? So, because it's all on the bill, and it's part of the same thing. But we're in collection mode, but we don't have any responsibility in that process. It is going to be purely the process that municipality undertakes as they collect delinquent property tax. So there'll be some period of time where they will try to collect it, and if those periods of time pass, then eventually it'll go into a foreclosure process. And then typically in the foreclosure process, what they'll do is the new buyer will get all the taxes current and then own the property, and then we would just remain on the property of whatever's not been paid. Just
more broadly, in terms of CPACE, how big do you see it getting? Is this going to be something like EB5?
Yeah, so I think it's going to become ubiquitous. Local Law 97 requires buildings over 25,000 square feet to be 80% more energy efficient by 2050. So that's a huge number to achieve. So when these mandates are being put in place, and you have the tailwinds of ESG behind us, this market is going to continue to grow, because developers and owners are going to have to find ways to finance those projects.
In New York, are you getting specific requests because of Local Law 97 and landlords wanting to meet those mandates?
Yeah, matter of fact, we started getting requests a couple of years ago when Local Law 97 initially passed. But there really wasn't a lot. There really wasn't much to do there until the program became live.
Right.
So now we're starting to see a lot of inflow on that, and people are trying to figure out how to get those things financed.
I mean, as CPACE becomes a more viable financing tool, why are the big banks like Wells Fargo, JP Morgan not just originating CPACE financing themselves? Like, why do they need to rely on you guys?
I think some banks are doing it, but it's not that easy to do across the country.
Mm.
right? I see banks doing it more regionally or maybe even locally, where they've got a customer that's doing a project, they're going to provide the senior financing and they will also want to do the PACE financing. But the industry is very different across the country, right? So every program is nuanced. There's a difference in exactly how that program works, what the documentation process is,
Right.
how these things are financed, et cetera. So for them to go try to do it across the country is going to require a lot of effort.
Uh,
And so it's easier to just work through people like us who've already built 7 years worth of knowledge on exactly how each of these programs works in the various municipalities.
and this is a more technical question, but in New York, a lot of these commercial real estate projects and also throughout the country are financed through CMBS loans where mortgages are bundled together, sold as securities to bond investors. How does CPACE exist alongside a CMBS loan? Because as you know, it's different than a conventional loan. You have to work with bondholders and getting their approval and stuff.
I think that's a part of the market that we're trying to figure out exactly how it would work.
Right.
And so there's lots of discussions happening as we speak right now with CMBS servicers on how we would go ahead and do this. There's a lot of different things that are kind of in the works, but it is a more difficult part of the market that we're trying to figure out.
Are governments doing this at all? Are you getting any calls from certain municipalities, like in government-owned buildings, that they can use CPACE? Is that a possible market for you guys?
We've been talking about that.
Yeah.
The problem is the way PACE works is that if there is a default, then someone's got to pay the assessment, and local governments don't pay taxes.
That is an interesting conflict. And then are you seeing this more being used as to rehabilitate existing buildings or new construction?
Yeah, I think originally PACE started as kind of a retrofit business, really,
Right.
minor projects to stabilize properties. What's transpired over the last couple of years, and really in 2019 is when this started, but once the rating agencies were able to rate gut rehabs and new construction projects, those became the larger part of the market. And going forward, you're going to see that continue to be a larger part of the market, but you're also seeing refinancings becoming part of the market too, right? So especially during COVID, there was several deals that we had done, and I'm sure others had done as well, that were refinancing deals. So it enabled these sponsors to pull money out of their projects so that they were available, that money was available during the COVID time to make sure that they could survive through that period of time. And then the other thing we're seeing is they're doing refinancings to redeploy that money elsewhere into higher earning projects.
I think that's all the questions I have, Mansoor. I really appreciate your time. This was super insightful, and I really appreciate you speaking with us.
Absolutely. Thanks, Keith. I appreciate it.